In this video, I'll be breaking down how much you need to make in order to afford a 2024 Mustang Dark Horse. I think you should really consider following one of these rules in order to avoid making a huge mistake that's going to end up setting you back for years financially speaking. I've also got a link down there to a free auto quote where you could save up to about $600 a year in the description, but more on that later. There are 4 options I'll be going over today, and you can decide on which one suits you the best depending on how into cars you are. Some people just want something cheap and reliable to take them from point A to point B, and some are willing to sacrifice quite a lot more, spend a lot more in order to get the car that they really want. No decision is really the best. It just kind of depends on the individual's preferences and their personal situation financially. This is 4-Wheel Finance, a channel dedicated to helping you make smart financial decisions. Before I dive into the first rule, these videos take quite a lot of time and effort to make, so please give it a like, subscribe, and comment down below what other vehicles you would like me to review. The first rule I'll be going over today is the 24-10 rule, and this states you should put at least 20% down, you shouldn't finance it for more than 4 years or 48 months, and the payment shouldn't be more than 10% of your monthly gross income. The 2024 Mustang Dark Horse has an estimated MSRP of around $60,000 before market adjustments. This means you would need to put down about $12,000. And with the average new vehicle interest rate of 3.86% and a 48-month term, this would bring your monthly payment to $1,080.79. Take note here that you're also going to pay about $4,000 in interest in this case. Bankrate states that the average monthly insurance cost is $148 a month, but this varies a ton from person to person. Your age, your driving history, the part of the country that you live in, and the vehicle you're insuring. So use that smart financial link I've got down there in the description to see how much it would cost you to insure something like this or your personal vehicle. This brings your monthly total to $1,228.79. Going back to that 24-10 rule, this would mean you need a monthly gross income of $12,287.90, which adds up to about $147,000 a year. I really encourage you to take a look at the opportunity cost here. If you were to buy a cheaper $10,000 car or even a $5,000 car in cash and put what would be your car payment of $1,080 in the market instead, over the course of 5 years with a pretty conservative 6% rate of return, this would turn into about $75,000, gaining about $10,000 here in interest. Take a look at those Acorns and M1 Finance links in the description below. It's super easy to get started investing, and I highly encourage you to get started as early as you can. Even a small amount of money can turn into something pretty special over a long period of time. And this is just for the first 5 years. If you would continue on for 10 years, it would amount to $176,000, again at that 6% rate of return. Just take a look at that interest there. And for reference, the stock market averages around 10% return per year, so my 6% estimate is pretty dang conservative. The next rule I'll be going over is my own, and for my rule, you need to have at least a 6-month emergency fund, invest 15% of your monthly gross income into your 401k or 403b, and max out both your Roth IRA and your HSA ideally, but I'll leave that part as optional. And I know that this does seem like quite a lot of saving, and it definitely kind of is, but I don't give you a monthly percentage rule that you have to stick to in terms of spending beyond that. So it's up to you to decide if you want to spend more of your monthly income on a vehicle, or if you'd rather spend less on cars and spend it on going out to eat more, going on more vacations, or just buying a bunch of nonsense on Amazon. It's up to you. And that 6-month emergency fund covers you just in case anything crazy happens, especially if you're in an industry such as commission or sales-based where that monthly income isn't exactly the same. And the investment portion just gives you a little bit of financial security later in life when you're probably going to need it the most. The majority of people say that, hey, nothing's guaranteed, and while it's true that nothing's guaranteed, the average American lives to about 78 years old, so you're probably going to need that money, statistically speaking, so you might as well get started investing and saving now. The next rule I'll be going over is the Dave Ramsey rule, and he thinks you should have at least a 3 to 6 month emergency fund. The vehicle shouldn't be more than 50% of your annual gross income, and you should purchase it all in cash. Given that the 2024 Mustang Dark Horse starts at about $60,000, your annual gross income would need to be a minimum of $120,000. Ideally, it's nice to buy a vehicle in cash, as you would avoid having to pay that $4,000 in interest, and your insurance would be a little bit lower. But obviously, not everybody's got $60,000 in cash that they can put towards a car, and there's a decent chance that if you were to finance this and put the difference in the market, you would end up with more money at the end. Final rule I'll be going over is the 1/10 rule, which was developed by Financial Samurai. This is a very popular blog that you may have heard it before. It's been around for a very long time. And personally, one that I think that the majority of people trying to build their wealth as quick as they can should consider. It really doesn't allow you to buy a new vehicle, but it's set up to help you spend responsibly, which reduces your financial car ownership stress and increases your net worth a lot faster than other rules over time. This rule is pretty straightforward. It states that you shouldn't spend more than 10% of your gross annual income on a car. It can be new or old, but obviously it's probably going to be used, and you should own that car for at least 5 years, but ideally more. And the theory behind this here is to minimize your financial stress, frees up a little bit of money to invest in assets or other opportunities that'll come your way. It's nice having a little bit of money on the sideline that you can throw into something that seems like a good deal or a good opportunity in order to make you more money. It's a lot more stressful and difficult making important life decisions when you're worried about your payments each and every month. Once again, this is 4Wheel Finance. If you've got any questions regarding car buying or how much of a car you can afford, please leave them down there in the comments below. And don't forget to give a look at that Smart Financial link if you're interested in saving a little bit of money on your car insurance. It's completely free, takes like 20 or 30 seconds to fill out, and you can save up to about $600 a year.